Hi, and welcome to the Trading Bell Show. We are right here at Old Mutual to speak to Anthony Muithiga, and he's the Managing Director, Old Mutual Investment Group, just to understand how is the landscape, how are these particular fields of investments doing, and matters alternative investing. Anthony, welcome to the show.
Thank you, Mina.
Yes.
It's a pleasure to be here.
It's good to see you after quite some chase. Let's get into the conversation by, first of all, endearing to our viewers about what you have been doing for over the 100 years you've been established. I don't think any one of us was here. But how are you faring on, and what are your product really diversifications here at Old Mutual? Yeah.
So thank you. So Old Mutual, you're right, has been in Kenya for more than 100 years and more than 178 years on the continent.
Yeah.
Specifically in Kenya, Old Mutual is well known for three things.
Yeah.
For offering protection,
yeah.
Offering investment solutions to customers,
yeah.
and thirdly, enabling individuals and companies to grow.
Mm-hmm.
Currently, Old Mutual Group in Kenya is in 4 pillars of business. Mm-hmm. We're in life assurance,
yeah.
we're in general insurance,
yeah.
including medical. Mm-hmm. We're in investment management,
mm-hmm.
where I'm responsible. Mm-hmm. And then we're also in banking.
Yeah.
And those 3 pillars are the core pillars of any financial services group, business, or sector. Mm-hmm. And it's a pleasure for that. And we are proud as a group that we're able to provide that to our customers in Kenya.
Okay.
And across other markets on the continent.
Okay. Yep. Speaking of the investment landscape, we have seen a lot of changes that have come over time. Now that we're talking about you, who has been a century plus old, I'm sure you have seen it enough. And I wanted to ask you about how you have been adapting, and in terms of your investment strategies to remain competitive in these current times. Yeah.
So the beauty about the investment ecosystem is that things have to change so that new opportunities are created, mm-hmm. and new challenges bring new solutions. Mm-hmm. So the main things which have changed over the couple of years, we've been offering investment solutions for our customers are mainly 2. One, customer tastes and preferences, and then on the other side is the what we call macroeconomic parameters of Kenya as a country, mm-hmm. Have been changing from the things we follow closely in financial markets. The growth of the economy as mm-hmm. measured by the GDP, mm-hmm. Price of commodities as measured by inflation, mm-hmm. Interest rates, currency movements or the exchange rate movements, mm-hmm. And lastly, what we call supply of money or money supply.
Absolutely.
So those factors have been changing. People who have been before us since independence today, they'll mm-hmm. tell you those parameters have really changed. But again, they have changed both in a good and sometimes challenging manner, mm-hmm. but we've created solutions for our customers to address mm-hmm. those challenges, especially in the recent past, where volatility of capital markets mm-hmm. has slightly been more erratic than ever before. Yeah.
I was recently in a conversation with the Association of Pensions in mm-hmm. the country, and I know that you have a strong presence in pension funds management. And I want to bring in the conversation on alternative investments and what you're doing as Old Mutual, because there has been a desire to move from what we can call the old school methods that are still in existence of investing your customers' funds to really looking for alternative investments. How are you strategizing or sitting around this conversation?
Yeah. That's a very good conversation for us here at Old Mutual, specifically at the asset management business, which I'm responsible for.
Yeah.
So you're right. Mm-hmm. We play a significant role in investing long-term assets of pension funds. Yeah. We quite have a substantial funds under management in that space, above 250 billion shillings, mm-hmm. made up of a long list of institutional pension funds and our management, both in the private sector and the public sector.
Yeah.
And you are right to say there's been a bit of fatigue in some traditional investments or securities. Yeah. So over the last plus minus 50 years, mm-hmm. the pension funds in this country have heavily invested in around 4 main asset classes.
Okay.
One of them being the listed equity space or at the stock exchange.
Yeah.
For example, at the Nairobi Securities Exchange, although they have also been able to do across East Africa and a bit globally. Secondly, pension funds have really invested heavily in government securities, both treasury bonds and bills.
Yeah.
Thirdly, they've had a good share of the property market. And from a short-term perspective, pension funds in Kenya have invested in bank deposits or fixed deposit from commercial banks.
Okay.
And a bit of what we call offshore investments.
Okay.
So those 4-5 asset classes have really dominated the investment journey or strategies of Kenyan pension funds.
Yeah.
But as time has moved on, there's been fatigue which has been caused by mainly 2 things. One, more challenging environment, investment environment, like what we have said, increased volatility.
You're right.
And secondly, over-concentration to 1 or 2 asset classes. And maybe if I made a third one, some not so good fortunes of certain asset classes. We know, for example, the stock market has not done very well in the last 7 years. I think there are 2 or 3 years of positive return out of 5 or 7 years of negative returns. And that has really impacted people's long-term savings.
Yeah.
And for that reason, the discussion of alternative investments has come to the front. And as Old Mutual, we've tried to take an early lead in that narrative. Yeah. And on behalf of our listeners, alternative investments are not new.
Okay.
They are as old as what we call conventional, traditional investments. The only difference is when they are adopted by a specific geography, country, or region. So, for example, in Kenya, we've had a slow adoption of alternative investment because we had other dominant asset classes. Yeah. But those dominant asset classes have somehow disappointed us, or they have not addressed the new challenges. And then alternative investments have also not been available in the structures we need. And there's been a bit of a gap of a skill set, I must admit. For that reason, at Old Mutual, in the last couple of months, plus minus 2 years, we've really put a lot of effort in bringing this discussion to the front in 2 ways. One, we've built enough skill set to offer alternative investments. Okay. And secondly, we've really made our clients, especially our institutional clients, knowledgeable by training them, educating them about what are these alternative investments and what role they play in their investment portfolios. Okay. Yep.
So at the risk of enlightening some of your competitors, I would like you to mention at least one of these alternatives that you've probably already started, it's already out here and it's known, but you can tell this was not one of the traditional ways in which was the dominant ways of investing funds.
So thanks. So there are certain sectors in the economy which has brought about alternative investment solutions. And these are also driven by the need of the society. For example, the infrastructure space has made it possible for us to curate alternative solutions. For example, last year, we offered our customers and our clients an infrastructure fund, which was structured by our group and offered locally by ourselves to our clients to invest in infrastructural projects which are not necessarily available to you as an individual, to you as individual, corporate, or a person. Okay. And these opportunities, that particular opportunity was gladly in dollars, which was good at that time because we had a bit of high volatility of the Kenyan shilling against the dollar. So it was a really good opportunity, which most of our customers who were able to understand the solution took up the opportunity and invested. Another investment opportunity which we are currently offering our clients on the alternative investment space is on the energy sector. Okay. So the energy sector, by and large, is a large, complicated sector. It's what moves the economy. Traditionally in Kenya, we are known for 3 sources of energy. We are known for hydro, we are known for geothermal, and lately we are known for wind. But we are now startly being known more for solar energy. So solar power has offered an opportunity for us, again, to structure an alternative investment solution. Okay. We actually call it solar as a service, which we enable long-term investors to partner with solar energy providers and solar energy consumers, make a partner of three, where our clients become the ultimate financiers of such projects. And the revenues from those projects are trickled down to our customers as a stable, above average return for their money. And why we like about the investments in solar energy is because they tick some of the boxes which are relevant in today's reality about environmental friendliness, ESG principles, and by and large, sustainability of a viable ecosystem.
You know, I sometimes try to think how you have to fit in the shoes of your clients, because for them at the end of the day, most of them are interested in seeing a good return. And we have had pressure coming, I think, from many other sides, one of it being especially the interest rates that we have seen sometimes hike on government papers and bonds and all that, which puts pressure on you guys as well to at least as well give quite a substantive return as well. I don't know whether that has been one of your challenges and what you see of late. I've seen them stabilizing now to certain other levels. But is this some of it? Over and above that, my question really in basic was, what are some of the challenges that you're facing in this sector?
Yeah, that's a good one. We've tried to be extremely adaptive, but it's a fair admission that the environment has been challenging. So of the 5 macro parameters we monitor, 2, you are right, have been very challenging. And that is interest rates and exchange rate. We've been a bit comfortable with inflation and economic growth. Inflation, we are lucky, it's been below 10 for a while. The growth of the economy has been above 5 to 7%, which is okay for a frontier market like Kenya. But interest rates and exchange rates have really been tough in the last 3 years. So if I start with the interest rates, you are right, they've been high and they're still high. Interest rates are a double-edged sword. When they're high, it might appear that they offer good returns for savers and investors. But again, they also punish borrowers because of high cost of credit.
True that.
And when there's high cost of credit, it's hard to do business. And if it's harder to do business, increasingly investment opportunities offering real positive returns start diminishing. So it's not okay to remain in a high inflationary or high interest environment for a while. And okay, so of course we know the high rates from government paper or bonds and bills, though investors have enjoyed, but they're also hurting the government through cost of servicing local borrowing or local debt. We must say we are a bit happy that the rise of interest rates seems to have plateaued, and there's some strong signs they might be starting coming down. But wait and see, because it's highly driven by the appetite of the government for local borrowing and by extension their wish to stabilize the currency, because interest rates are normally used to stabilize an exchange rate. Now, on the relationship between the dollar and the shilling, we've seen massive volatility, especially in the first few months of the year. But over the last 3 months, things have stabilized a bit. The shilling seems to have found its balance against the dollar in the last couple of weeks. We are happy by the stability because it brings certainty, but it reminds us that we need to always embrace a multi-currency investment portfolio. That means if you have an investment portfolio, whether as an individual or as an institution, you need to diversify on the asset classes, but also need to diversify on the currency. And that's how we are addressing that challenge. Specifically the currency challenge, you've addressed it by make sure we provide our clients with foreign currency solutions, offshore investments, and even some local structured foreign currency solutions like a dollar money market fund for the retail investors, and also low ticket offshore investable mutual funds, which are pre-selected by our investment team and offered to our clients.
All right.
Yeah.
Maybe as you come to a close of the conversation, I like asking this, you being the old boy, what would you say is your competitive advantage for guys who are still considering where to go?
That's good. I mean, at Old Mutual, we've been around the block for a while.
Yeah.
We've led in many things, including product development, market trends, good service, huge client base, and assets under management. But what has kept us really going and winning, if I may use that word, is mainly three things. One is being very customer centric.
Okay.
It's not easy to remain relevant in such a highly competitive industry, especially the financial services sector, specifically in asset management, where my team and I spend most of our time. Secondly, we've made sure that we continue evaluating the fit for purpose for our products and services. We've made sure that both in the corporate, institutional, or in the retail space, we have products which make us relevant to our customer needs. And then thirdly, and this is something which is really dear to Old Mutual, is embracing integrated financial services. We call it internally IFS, which we are able to deliver it through our sister companies, and secondly through partners. Those three, they might sound very basic, but they keep us going.
You know, there's a saying where I come from, that an old man can see further than a young man who is seated. Actually, no, who is actually on top of a tree. Sorry. So you guys,
it's a nice one.
Giving you the credit of
Thank you.
the years. Finally, some individuals could be watching this and saying, okay, investment, thinking of all those kind of things, my money, my pension, everything I'm thinking about. What would you say are your top one or two quick things that you could share as tips when you're thinking about investing your money? Would you share some? I know I'm putting you on the spot here.
I think, and it's fair. It's a fair question because this is something which bothers individuals, families, and institutions about if I have an extra coin or shilling, what do I do with it? Especially the young people and young families, and even young companies or institutions like SMEs. What they do with their retained earnings or extra money from their operations. So what we try to tell them specifically is just to embrace certain basic ways of choosing any investment. And there are 5 things, we call them the attributes of an ideal investment. Of course, there is no idealistic world, but those combined provide an ideal investment. So one of them is anything you consider an investment, it should demonstrate the ability to grow. It can come from 1 to 2, 1 to 10. You should see its growth path. Secondly, the aspect of profit return should be very clear. You should understand what represents return or profit in that investment. So if it's a property, it should be rental income and price appreciation. If it's a stock or a share, should be a dividend and price appreciation. If it's a government bond, should be interest income and any attributable increase in value. So that you should, as an investor, should understand the source of the return. Number 3, and most important, is liquidity. How do I convert this investment, if need be, to cash at the short-term time possible without material loss in value? Because we need to understand that. And fourth is security or safety. So security means any investment you get into, you should be able to demonstrate its ownership through an authentic document representing ownership. Whether it's a certificate of ownership, it's a certificate of lease, it's a share certificate, or whichever instrument, legal instrument which represents ownership. And that legal instrument should be verified and even negotiable for exchange of value. But most importantly, I insist, and Old Mutual, we are very big in financial literacy training, is you should be able to understand any investment you get into. You shouldn't 100% leave it to people like us, the professional, to tell you it's good. Now, those 5 might not be found in every investment.
That's true.
But if 3 out of 5 are always found there, please do. And if you allow me to tell our viewers, the best investment is not a specific asset class, but a diversified investment portfolio.
Okay, wow. What a good way to end it. But before I end that conversation, I must ask you about the outlook. What are you seeing in the near future?
I mean, I'll speak on the economic front. That's the outlook I understand.
Yes, that's true.
Two things are a bit clear. Interest rates seem to have plateaued and they're starting to soften. That means they're coming down. And we're happy about that. We wish that continues, but there's a clarity that interest rates are coming off and down. And we can see it from yields or rates of new issuances of government bonds and bills. Secondly, we see a stable currency against the dollar. There's been a lot of negative noise, which has the potential of affecting the relationship between the dollar and the Kenyan shilling, but it has held strong at current levels, and we think that will be sustained to end of the year. The third one, which bothers us, and we must have not a crystal ball, but clarity about what's going to happen next quarter, next month. For the second half of this year, which we are deeply in, inflation seems to have stabilized. It's been single digit, which is good, and it's driven by things we can see. The country has gone through a good long rain season. There's plenty of food. Commodity prices have stabilized. We've not seen some spikes in energy prices. And then lastly is the outlook from an economic growth perspective, as measured by the GDP. I think the focus are out there. Definitely, regardless of some tough economic decisions being made by companies and governments and government, we're not going to be in a recession. We're in a growing economy. The country is likely to register above 5.5 to 6.5 GDP growth rate, which is good. Not the best, but it's acceptable under the circumstances. And the last thing, which as an outlook perspective, we seem to be a bit starting to get comfortable with, there is a feel of back to work and less of agitation, which is a good thing. Business survives where there's peace and decorum, and people are ready to work. And we see Kenyans are really ready to work. And our customers demonstrate that every day when they entrust us with more resources to manage on their behalf.
That's an interesting word. Thank you so much for your time.
Thanks a lot. Cheers. All the best.
Alrighty.
Asante san.
There you have it. I mean, Anthony, we think very optimistic about the country and how really the future is looking, and really a great conversation on how Old Mutual as well is managing, especially on matters alternative finance. Thank you so much for your time. I leave you now with the market.